Welcome friends, Banking Regulations and Business Laws, Module A, B, C and D. And this video covers about approx 300 advanced MCQs for CAIIB 2026 exam. Topics covered in this video are regulation of banking business, legal framework of regulations of banks, financial sector legislative reforms, and Financial Stability and Development Council, Negotiable Instrument Act 1881, Foreign Exchange Management Act 1999, Creation, Registration and Satisfaction of Charges, Definitions under SURFACI Act 2002, Enforcement of Security Interest, the Recovery of Debts and Bankruptcy Act 1993, Recovery of debts determined by tribunal and miscellaneous provisions, meaning and essentials of a contract, contract of indemnity, contract of guarantee, types of companies, Limited Liability Partnership Act 2008, Transfer of Property Act, effect of non-registration and dissolution of a firm. So first question is, banking means acceptance of deposit of money from the public for lending or investment. Such deposits may be repayable on demand or may be for a period of time as agreed to by the banker and the customer, and may be repayable by check, draft or otherwise. So whether this statement is correct or not, this statement is entirely correct, and answer is A. As per section 5B of the Banking Regulation Act 1949, apart from banking, banks are authorized to carry on other business as specified in section 6 of the Banking Regulation Act. Banks are, however, prohibited from undertaking any trading activities. Banks cannot do trading activities. Banks may be companies registered under the Companies Act 1956 or 2013, statutory corporation constituted under special statutes or cooperative societies registered under the Central or State Cooperative Societies Acts. Here answer is A, true. The extent of applicability of the regulatory provisions under the Banking Regulation Act and the Reserve Bank of India Act to a bank depends on the constitution of the bank. In public sector banks like State Bank of India, nationalized banks and the regional rural banks, 50% or more of their shares are held by central government. This is correct. So answer is A, true. Central government holds a majority stake of 50% or more in all public sector banks, which ensures majority ownership, control and policy alignment. Cooperative banks operating in one state only are registered under the State Cooperative Societies Act and are subject to the control of the state government as well as also the Reserve Bank. Here answer is A, true. Single state cooperative banks are indeed dual regulated. They operate under a split authority governed by state laws for management and the Reserve Bank of India for banking operations. The government has direct and indirect control over banks. It can exercise indirect control through the Reserve Bank and also act directly in appeals arising from the decisions of the Reserve Bank under the various provisions of the Banking Regulation Act. Here answer is A, true. In India, the government holds a dual mechanism for banking control. It exercises indirect oversight through the Reserve Bank of India and acts directly as the appellate authority for specific regulatory decisions under the Banking Regulation Act 1949. Risks can be mitigated through diversification. Here answer is A, true. Diversification mitigates unsystematic risk, the asset-specific dangers tied to individual companies, sectors or regions. By spreading exposure, the negative performance of a single investment is balanced by others, shielding the portfolio from extreme losses. Enterprise-wide risk management is a process of identifying internal and external factors that impact the achievement of the objectives of the organization and its business and financial targets. Here answer is A, true. The Enterprises Risk Management Framework released by COSO, Committee of Sponsoring Organizations of the Tradeway Commission, as a framework has been adapted by banks for managing the risks of the organization, Basel norms and regulatory compliances. Here answer is A, true. State which of the following statements are true. Here statements are: a public sector bank is a body corporate created under a special statutes. A banking company is registered under the Banking Regulation Act, and cooperative banks are registered under the Multi-State Cooperative Societies Act or a State Cooperative Societies Act. And last, none of the above. Here A and C are correct. A public sector bank is a body corporate created under a special statutes, and cooperative banks are registered under the Multi-State Cooperative Societies Act or a State Cooperative Societies Act. B is not correct. A banking company is registered under the Banking Regulation Act. This statement is not correct. Under which act Reserve Bank was constituted? Here answer is B, RBI Act. The Reserve Bank of India was established on April 1st, 1935 in accordance with the provisions of Reserve Bank of India Act 1934. Cooperative banks operating in different states are registered under the following. Here answer is B, Multi-State Cooperative Societies Act. Cooperative banks operating in multi-states are registered under the Multi-State Cooperative Societies Act 2002. The shareholders of a banking company are entitled to dividends only after all the capitalized expenses are written off. Here answer is A, true. Under Section 15 of the Banking Regulation Act 1949, a banking company is strictly prohibited from declaring or paying any dividend on its shares until all its capitalized expenses have been completely written off. The Commission or brokerage payable on selling shares is restricted to 2.5% of the paid up value of the shares. Here answer is A, true. Under Indian corporate and financial regulations, a 2.5% cap typically applies to specific activities like underwriting, commissions on debentures, or certain banking restrictions rather than a flat limit on general share sales. Every banking company should have a full-time chairman with the specified qualifications. Here answer is A, true. Under the Banking Regulation Act 1949, banking companies are required to be managed by full-time or part-time chairman. If the chairman is part-time, the bank must appoint a full-time managing director or CEO to manage daily affairs. Both roles require explicit regulatory clearances. The principles of corporate governance, including the fit and proper criteria for directors, apply to banking companies as well as public sector banks. Here answer is A, true. Corporate governance principles and fit and proper criteria for directors universally apply to both private sector banking companies and public sector banks. Regulatory bodies mandate these standards to ensure the stability, integrity, and transparency of the entire banking system. The Banking Regulation Act empowers the Reserve Bank to issue directions to banking companies in public interest, in the interest of banking policy and in the interest of depositors. Here answer is A, true. Under Section 35A of the Banking Regulation Act 1949, the Reserve Bank of India is explicitly empowered to issue directions to banking companies. Deferred tax assets. Unabsorbed depreciation and carry forward of losses which can be set up against future taxable income, which is considered as timing differences, result in deferred tax assets. Here answer is A, true. Section 21 provides for the issue of directions to regulate loans and advances by banking companies. This may be done by regulating the purpose of lending, margins in respect of secured loans, rate of interest, and terms and conditions of lending. Here answer is A, true. Section 21 of the Banking Regulation Act 1949 empowers the Reserve Bank of India to regulate lending policies of banking companies. To protect depositors and the public interest, the RBI issues binding directives controlling the purposes, margins, interest rates, and terms of credit. Section 20 of the Act imposes restrictions on loans and advances to directors and companies and firms in which directors are interested as director, partner, etc. Here answer is A, true. Section 20 of the Banking Regulation Act 1949 and Section 185 of the Companies Act 2013 both imposes strict regulations on corporates and banking lending to directors. With a view of ensuring financial stability, a banking company, which is a scheduled bank, has to maintain a certain percentage of time and demand liabilities as cash reserve with Reserve Bank under Section 42 of the Reserve Bank of India Act. Here answer is A, true. Scheduled banks are legally required to maintain a specified percentage of their net demand and time liabilities as cash reserves. Banking companies are required to maintain such assets in India at not less than 75% of demand and time liabilities as at the close of business of the last Friday of every quarter. Here answer is A, true. This requirement refers to Section 25 of the Banking Regulation Act 1949. It mandates that every banking company operating in India must maintain assets within the country equal to at least 75% of its total and demand liabilities. Reserve Bank may issue directions to banking companies under Section 21 of Banking Regulation Act on. Here answer is B, loans and advances. Under Section 21 of the Banking Regulation Act 1949, the Reserve Bank of India can issue directions to banking companies to control advances and loans. Which of the following statements are true? Reserve Bank can issue directions on loans and advances under Section 21 of the Banking Regulation Act. Regulation of credit to different sectors of the economy is known as selective credit control. Banks are free to lend any amount to their directors. And fourth, banks have to file a return to Reserve Bank regarding unclaimed deposits under Section 26 of the BR Act. Here A, B and C, D are correct. C is not correct. The minimum amount out of the net profit which is transferable to the reserve fund each year after adjustment provision towards bonus to staff by the banks incorporated in India is, here answer is A, 25%. Under Section 17 of the Banking Regulation Act 1949, banks incorporated in India must transfer at least 25% of their annual net profits to a statutory reserve fund before any dividend can be declared. Which of the following statements are false? Here C and D are false statements. The share capital and reserves of a banking company form part of its demand and time liabilities for the purpose of Section 42 of the RBI Act. The cash reserve required under Section 42(1) of the RBI Act will be a minimum of 3% of the demand and time liabilities. So here C and D are false. Every bank has to prepare its balance sheet and profit and loss account annually as at the end of the calendar year or at the end of 12 months as on a date notified by the central government. Here answer is A, true. The Board for Financial Supervision, which has been set up by the Reserve Bank under the Reserve Bank of India Act, supervises the affairs of banking companies. Here answer is A, true. Reserve Bank is empowered to conduct. Here answer is A, inspection. Reserve Bank is empowered to conduct inspection of a banking company under section 35(1) of the BR Act. Which of the following statements are true? Here answer is A and C. Both are true. A. Foreign banks have to prepare accounts and balance sheet in respect of all business transacted by them in India. And C. 3 copies of the balance sheet, profit and loss account, and auditor's report of a banking company have to be submitted to the Reserve Bank as return. Here answer is B, Reserve Bank. Reserve Bank may apply to the High Court for winding up of a banking company under section 38 of the BR Act. Which of the following statements are true? So true statements are B and D. B, the undertaking of an acquired bank may vest in central government or in any company or corporation as directed by the central government. And D, the Reserve Bank or a state bank or another person as specified by the Reserve Bank in its application before the High Court may be appointed as liquidator of a banking company. The minimum period for preservation of records under the PMLA 2002 for certain suspicious transactions after its reporting is 10 years. Here answer is D, 10 years. The public sector banks, namely a state bank and the nationalized banks and the regional rural banks, are statutory corporations established under special statutes. Your answer is A, true. The cooperative banks operating in more than one estate are registered under the Multi-Estate Cooperative Societies Act. Here answer is A, true. The State Bank of India is a. Answer is body corporate. The State Bank of India is a body corporate constituted under the State Bank of India Act. Cooperative banks have to prepare their balance sheet and profit and loss account in the forms set out in the third schedule to Banking Regulation Act. Here answer is A, Banking Regulation Act. A cooperative bank means, here answer is A, all the above, a primary cooperative bank, a central cooperative bank, and a state cooperative bank. The area of operation of an lab means local area bank, is usually restricted to a maximum 3 geographically contiguous districts. Your answer is D, none of the above. Options are 4 to 6, but correct answer is 3. Registration of NBFCs is mandatory under which rule? Answer is the Reserve Bank of India Act 1934. With effect from 1st October 2022, standalone primary dealers will be treated as part of which of the following classification as defined under scale based regulations? Here answer is C. ML. Under the Reserve Bank of India's scale based regulation framework, standalone primary dealers are classified under the middle layer. So answer is ML, middle layer. What is the minimum regulatory net owned funds prescription for infrastructure debt fund non-banking financial company? Here answer is D. The minimum regulatory net owned funds prescription for an infrastructure debt fund non-banking financial company is rupees 300 crores. Narsimham Committee 2 also gave its own recommendations for strengthening the banking system, improving the asset quality in banks, after which the Financial Stability and Development Council set up by the Government of India in December 2010 was the next major step towards reforming the sector. Answer is A. True. After liberalization and globalization initiated in 1991, reforms have been introduced in monetary policy, banking sector, and forex market. The Prevention of Money Laundering Act 2002 does not apply to banking transactions. Here answer is false. The term money laundering has been defined in the Prevention of Money Laundering Act 2002. Answer is A. Correct. Money laundering is defined in section 3 of the Prevention of Money Laundering Act 2002. Record of transactions specified under the Act is to be maintained for 5 years. Answer is A. True. Under the Prevention of Money Laundering Act and SEBI regulations, reporting entities and intermediaries are legally required to maintain records of all specified transactions for 5 years from the date of transaction. All cash transactions of the value of more than 10 lakhs or its equivalent in foreign currency are covered under PML Act. Answer is A. True. All cash transactions exceeding rupees 10 lakh are covered by the Prevention of Money Laundering Act 2002. Protection is provided to the paying banker. Under the statutes, however, the payment has to be payment in due course as defined in the Act for protection under Section 85 of the Act to be available. Here answer is A. True. Under the Negotiable Instrument Act 1881, statutory protection shields the paying banker when honoring check, but it is strictly conditional. To gain protection under Section 85, the payment must legally qualify as a payment in due course. Which one of the following is not the holder of check? Answer is B. A bearer check found lying on the road by Y. Which is not one of the criteria to be fulfilled for a person to be holder in due course of a check? Here answer is A. The check should be crossed. This is not the criteria. Others are correct. It should have been acquired for consideration. It should have been acquired before its maturity. But the check should be crossed is not the criteria for a person to be a holder in due course. Which one of the following is not an example of material alteration necessitating for refusal of payment of a check? Your answer is A. When a bearer check is made into an order check. When a bank is paying a check presented for payment for debit from the savings bank account of the customer, what is the relationship between banker and customer? Here banker and customer relationship is debtor and creditor. Authorized person is an individual authorized by the RBI to deal in foreign exchange. Here answer is A, true. A current account transaction alters the assets or liabilities outside India of person resident in India. Here answer is false. Only capital account transaction alters the asset and or liabilities outside India of a person resident in India. A capital account transaction includes payments due in connection with foreign trade in the ordinary course of business. Here answer is B, false. Payments due in connection with foreign trade, services and short-term banking in the ordinary course of business are classified as current account transaction, not capital account transactions. Civil court has the jurisdiction to entertain any suit or proceedings in respect of any matter under the FEMA. Here answer is B, false. Civil courts are explicitly barred from entertaining any suit or proceedings in respect of any matter that falls under the jurisdiction of the Foreign Exchange Management Act 1999. Any person aggrieved by any order passed by the competent authority in respect of assets held abroad and seized may prefer an appeal to the High Court. Answer is B, false. Under Indian law, an aggrieved person cannot appeal directly to the High Court. For asset seizure orders, there is mandatory tiered appellate process. A financial instrument whose value is derived from change in interest rate, foreign exchange rate, credit rating or credit index, price of securities, etc., or any other underlying or a combination of more than one of the aforesaid are called, correct answer is, derivatives. Under the Payment and Settlement System Act 2007, which entity is authorized to approve commencement or operation of a payment system. Answer is B, Reserve Bank of India. For RBI to consider authorizing a company or corporation to operate or regulate the existing clearing houses or new clearing houses of banks in order to have a common retail clearing house system for the banks throughout the country, what percent of the equity of such company should be held by the public sector bank? Answer is A, not less than 51%. Prior approval is required from RBI before a system provider causes any change to take place in the system, which would affect the structure or operation of payment system. However, how many days notice should be given to the system participants after the approval by the RBI? Your answer is D, 30 days. Mortgage is a transfer of interest in immovable property to secure an advanced loan or an existing debt or a future debt or performance of an obligation. Your answer is A, true. This definition is primarily based on Section 58 of the Transfer of Property Act 1882, which provides the foundational legal mechanics for property-based loans. In simple mortgage, the mortgage is by deposit of title deeds, and in English mortgage, the possession of the mortgage properties is not given to the mortgagee. Here answer is A, true. In usufructuary mortgage and in mortgage by conditional sale, possession of the mortgage properties is normally given to the mortgagee. Here answer is A, true. Possession is given to the mortgagee in a usufructuary mortgage, but in a mortgage by conditional sale, possession is normally retained by the mortgagor unless a default occurs. In the case of simple mortgage and mortgage by deposit of title deeds, the mortgagee has a right to proceed against the property mortgaged and also personally against the mortgagor. Here answer is A, true. The rule of priority in case of successive mortgages is in the order of time they are created. Here answer is true. The legal principle for successive mortgages follows the chronological order of their creation. Limitation period for filing a suit for sale of mortgage property is 12 years. When the money sued for becomes due, limitation period for filing a suit for foreclosure is 30 years from the date of mortgage that becomes due. Here answer is A, true. The legal position according to the Indian Limitation Act 1963, these time frames dictate when a mortgagee can legally pursue recovery or enforce their rights on a mortgage property. Mortgage is, here answer is transfer of interest. Mortgage is transfer of interest in the immovable property. Simple mortgage is created by, here answer is A, an instrument in writing. In mortgage, by way of conditional sale, the property is sold with a condition for reconveyance. Here answer is A. Limitation period for filing a suit for sale of mortgage properties is, your answer is D, 12 years when the money sued for become due. Appropriation is the setting aside of funds received from a debtor for a specific purpose of paying a specific debt. Your answer is A, true. In law and finance, appropriation of payments is the allocation of payment made by a debtor to multiple distinct debts owed to the same creditor. In India, actionable claims are assigned, and Section 130 of the Transfer of Property Act 1882 provides the rules for transfer of actionable claims. Here answer is A, true. In India, actionable claims in movable property are transferred exclusively through a written instrument signed by the transferor or their authorized agent with or without consideration in accordance with section 130 of the Transfer of Property Act 1882. Normally, as per the law, the assignee can only have rights equal to that of a assigner and cannot have better rights with certain exception. Here answer is A, true. The fundamental legal principle governing assignment is encapsulated in the maxim, no one gives what they do not have. Pledge means bailment of goods for the purpose of securing a payment of debt or an obligation. Answer is A, true. A pledge is a specific type of bailment where goods are delivered to a lender as collateral for a loan, debt, or the performance of a promise. Pawnee has special rights in as regards the goods pledged. Answer is A, true. In a contract of pledge under the Indian Contract Act 1872, the pawnee holds special rights over the pledged goods. They do not own the goods but hold a special property interest that grants them rights of retention, reimbursement for preservation and recourse in the event of debtor default. A valid pledge can be created by owner of goods or a mercantile agent. Your answer is A, true. Under contract law, while the true owner of the goods is the primary party who can pledge them, a mercantile agent is legally recognized as an exception. A constructive pledge involves only delivery of keys of the warehouse. Your answer is A, true. While handing over warehouse keys is a classic and legally recognized form of constructive delivery, giving the pledgee control without moving the physical goods. Under the contract of pledge, the pawnee can sell the goods pledged after notice or retain the goods and file a suit for recovery of debt. Here answer is A, true. Under section 176 of the Indian Contract Act 1872, if the pawner defaults on the debt, the pawnee has exactly those two options. They can either sue the pawner while holding the goods as collateral or sell the goods after providing reasonable notice. Security of movable property is called hypothecation. Here answer is A, true. Hypothecation is a legal and financial arrangement where a borrower places a movable asset as collateral for a loan. Pledge means, here answer is D, bailment. Pledge means bailment of goods for purpose of securing a payment of debt or performance of promise. Hypothecation is an implied pledge in cases where answer is constructive possession of goods is given. So hypothecation is an implied pledge in cases where constructive possession of goods is given. The term hypothecation has been defined in which of the following acts? Here answer is D, Surface Act 2002. Hypothecation is defined under section 2(1)(n) of the Surface Act. The term charge has been defined in section 2(16) of the Companies Act 2013 as charge means an interest or lien created on the property or assets of a company or any of its undertaking or both as security and includes a mortgage. Here answer is A, true. In terms of Section 77 of the Companies Act 2013, nearly all types of charges are required to be registered with the Registrar of Companies, though there are certain exceptions. Here answer is A, true. Under Section 77 of the Companies Act 2013, all companies must register every type of charge with the Registrar of Companies within 30 days of creation. Charge will have to be registered within 30 days of creation of the charge, and some additional time is permitted on payment of certain fees. Answer is A, true. Under Section 77 of the Companies Act 2013, all companies must register every type of charge with the Registrar of Companies within 30 days of creation. If the charge created is not registered, then the same is invalid against liquidator appointed under the Companies Act or the Insolvency and Bankruptcy Code 2016 and other creditors on winding up of the company or otherwise as the case may be. Answer is A, true. However, under IBC processes, appellate courts have ruled that the non-registration of a charge does not automatically strip a creditor of their secured status if the security interest is otherwise valid. Under Section 77, within 30 days after creation of charge, a company is required to register the charges created by company shall be registered with, answer is C, Registrar of Companies. Charge shall be registered by a company within, answer is 30 days from the date of creation of charge. Under Section 82 of the Companies Act 2013, A company shall give intimation to the registrar of the payment or satisfaction in full of any charge within a period of 30 days from the date of such payment or satisfaction. Under the Ombudsman scheme, the appellate authority would be, here answer is Executive Director of RBI. Answer is D. What is the maximum period for which an ombudsman, deputy ombudsman may be appointed under the scheme? Answer is Answer is B, 3 years. If a complaint made by a customer to a regulated entity is not replied, what is the minimum period after its receipt by the RE may the customer make a complaint to the ombudsman? Here answer is A, 1 month. An ombudsman would send a copy of the complaint received from a customer of a regulated entity to the RE. Here answer is A, true. Under schemes like the Reserve Bank Integrated Ombudsman Scheme, the Ombudsman automatically forwards a copy of the valid complaint to the concerned regulated entity. This is done to formally notify them of the grievance and direct them to submit their written response or versions of events. A buyer from a MSME has to adhere to the agreed payment date, which should not be more than 45 days from acceptance, deemed date of acceptance as per the law, failing which such buyer has to pay compound interest with monthly rests. Here answer is A, true. A dispute between parties where a MSE is involved or where payment are not made in time by a buyer may be referred to the Micro and Small Enterprises Facilitation Council for resolution conciliation. Here answer is A, true. Under the Micro, Small and Medium Enterprises Development Act 2006, any supplier MSE with delayed payments can make a reference to the Micro and Small Enterprises Facilitation Council. Any buyer who is required to get his annual accounts audited under any law for the time being in force is required to furnish additional information in the annual financial statement as regards the amount of principal and interest not paid by the buyer to MSME as on the balance sheet date. Here answer is A, true. Under section 22 of the Micro, Small and Medium Enterprises Development Act 2006, any buyer who is required to get their annual accounts audited under any prevailing law must explicitly disclose specific details regarding outstanding MSME dues. Which of the following act provides the current definition of MSMEs in India? Here answer is A, the MSMED Act 2006. The current definition of MSMEs in India is provided by the Micro, Small and Medium Enterprises Development Act 2006. MSMEs are governed by which of the following ministry? Answer is D. Ministry of Micro, Small and Medium Enterprises. Where an application is made to a court by a buyer for setting aside any decree or award made either by the Facilitation Council or by any institution or center providing alternate dispute resolution services, what percent of the amount of the decree award is to be deposited with the court by the buyer? Here answer is B. Under section 19 of the Micro, Small and Medium Enterprises Development Act 2006, a buyer is required to deposit 75% of the awarded amount with the court. The SARFAESI Act is applicable to the housing finance companies whose names are notified by the central government. Here answer is A. True. Under the SARFAESI Act, the central government does not need to notify each housing finance company individually. Instead, through a 2021 Gazette notification, the government broadly notified that all HFC registered with the National Housing Bank having an asset size of rupees 100 crore or more are classified as financial institution. Whether movable securities in possession of the bank can be sold by the bank without the intervention of the court. Here answer is yes, as the SARFAESI Act 2002 has made provisions to that effect. As per the laws existing today, the mortgage security cannot be sold without a court intervention. Is this correct? Answer is B. No. SARFAESI Act 2002 has now made enabling provisions. Provisions of SARFAESI Act 2002 applies to which securities? Here answer is C, where the security interests are created for repayment of financial assistance given by the bank or a financial institution. In the Mardia case, what did the Supreme Court declared as invalid? Here answer is D. Condition to pay 75% of the amounts as precondition while preparing appeal in the appeal to the DRT. The SARFAESI Act is applicable for pledged securities also. This is not correct. Your answer is B. False. For the enforcement of a mortgage security, court intervention is required even for actions under the SARFAESI Act. Your answer is B. False. For SARFAESI implementation, court intervention is not required. Banks and financial institutions can issue notice for enforcement over security under SARFAESI Act only if these securities are not in possession of creditors and only when the account is classified as NPA. Your answer is A. Banks and financial institutions can initiate SARFAESI enforcement for securities not in their possession only when the account is classified as a non-performing assets. If the borrower does not pay within 60 days After notice by the secured creditor, the creditor can take possession of the security. Your answer is A, true. If the borrower does not pay within 60 days after notice by the secured creditor, the creditor can take possession of the security. After receipt of notice under SARFAESI from the secured creditor for repayment of dues by the borrower is legally prevented from transferring his property in any way. Your answer is A, true. Under section 1313 of the SARFAESI Act, once a borrower receives the initial demand notice from a secured creditor demanding repayment of dues, they are legally prevented from transferring or disposing of the secured property in any way. On request of the secured creditor, the district magistrate or the chief judicial magistrate can take possession of the security for handing over it to the creditor. Here answer is A, true. Under Indian law, this procedure is governed by Section 14 of the SARFAESI Act 2002. When a borrower defaults and the secured creditor struggles to take physical possession of the mortgaged asset, they can request the chief metropolitan magistrate or the district magistrate for assistance. When the management of the company is taken over by the secured creditor, the directors of such company are entitled to compensation for loss of office. Answer is false. Under Indian law, directors are not entitled to compensation for loss of office if their removal or the loss of management occurs because a secured creditor has taken over the company's business or assets. When any bank or financial institution obtains a charge against property with which authority will the transaction have to be registered under the SARFAESI Act 2002. Answer is A, with the central registry. When can the provisions of SARFAESI Act 2002 be invoked for proceeding against the charged property? Answer is D, when there is default in repayment and the bank declares the account as NPA. Whether existing or future receivables are property? Yes. Both existing and future receivables are recognized as intangible movable property. Under legal framework such as the ancestral model law on assignment of receivables, whether existing or future, conditional or contingent, are legally defined asset. From the following, which function is of securitization of a securitization company? Answer is D, acquisition of financial asset from the originator. An asset reconstruction company needs registration from the RBI for commencement of business. Answer is A, true. An asset reconstruction company must obtain a certificate of registration from the Reserve Bank of India under Section 3 of the SARFAESI Act 2002 before it can legally commence business operations. Right of acquisition of a financial asset by the asset reconstruction company is subject to the prior agreements or contracts about the asset. Answer is B. False. In India, an asset reconstruction company acquisition of financial assets is governed by Section 5 of the SARFAESI Act 2002. Under this legislation, the acquisition is executed notwithstanding anything contained in any agreement or any other law for the time being in force, making the ARC's acquisition generally paramount to prior restrictive agreements. Acquisition of a financial asset by the asset reconstruction company is with the liability also over such an asset. Here answer is A. True. When an asset reconstruction company acquires a financial asset like an NPA or loan from a bank, it assumes the entire bundle of rights. This means the ARC essentially steps into the shoes of the original lender, taking on both the rights to the collateral and the underlying liabilities and obligations attached to that asset. For each asset acquired or to be acquired by the asset reconstruction company, there should be separate scheme. When the asset reconstruction company issues security receipts, the holder thereof is entitled to a undivided interest in the financial assets. Answer is A. True. The security receipt issued by the asset reconstruction company requires registration. Answer is B. False. Under the SARFAESI Act, the initial issuance of security receipts by an asset reconstruction company does not require compulsory registration. However, the ARCs themselves must be registered with Reserve Bank of India. Any direction issued by RBI under the SARFAESI Act has statutory effect and is binding on the parties concerned. Answer is A. True. Directions and master circulars issued by the Reserve Bank of India have statutory force, are legally binding on all regulated entities and limit their actions. After application of the SARFAESI Act, what have the existing companies to do about registration with RBI? Answer is D. They have to get registered within 6 months from the commencement of the Act. Which from amongst the following is a reason for the cancellation of registration of the asset reconstruction company without giving a hearing opportunity? Answer is B. The company ceases to carry on the business of securitization or reconstruction. Asset reconstruction means acquisition by any asset reconstruction company of any right or interest of the creditor in respect of any financial assistance. Answer is A. True. Asset reconstruction represents the process by which a specialized financial institution clean up the balance sheet of banks by taking over bad loans. SARFAESI Act is applicable to the regional rural banks. Answer is B. False. SARFAESI Act is not applicable on regional. Mortgage or asset-backed debt instrument can be issued by the asset reconstruction company to the general public. Answer is B, false. Asset reconstruction companies are strictly prohibited from raising money directly from the general public. They are also not allowed to accept public deposits or issue general public debt instruments. A guarantor to the loan is within the meaning of the word borrower under SARFAESI Act. Answer is A, true. Under section 2F of the SARFAESI Act, a guarantor is legally classified as a borrower. The law treats their liability as coextensive with the principal debtor, meaning banks can proceed against guarantors just as they would the original borrower. SARFAESI Act is applicable only when there is security. Answer is A, true. The SARFAESI Act is exclusively applicable to secured loans backed by underlying collateral or a security interest. Has SARFAESI Act defined hypothecation and whether the Act is applicable to hypothecation security? Answer is yes. A, true. Yes, the SARFAESI Act 2002 explicitly defines hypothecation and fully applies to hypothecation security. On giving of a default notice by the creditor, the borrower gives a reply to it. What should the creditor do? Here answer is C. Give due consideration to the reply as per requirement of the section 13(3)(a) of the Act. On sale of the security asset, the sale proceeds are appropriated. Firstly, answer is C. Towards payment of cost, charges and expenses for the preservation and protection of securities, insurance premium, etc. After coming into operation, the provisions relating to central registry, the banks and financial institutes will have to register all security interest created in the asset. Answer is A, true. This mandate acts as a centralized digital mechanism to track encumbrances, prevent borrowers from securing multiple loans on the same property and improve transparency in secured lending. Besides the SARFAESI Act, some other laws required some registration of charge created in the property. Is such double registration avoidable? Answer is B. No registration under the SARFAESI Act as well as any other applicable law will have to be made as the SARFAESI Act is not substitution for any other law. For challenging an action initiated by secured creditor against the defaulting borrower under the SARFAESI Act, the borrower can go to the civil court for an injunction. Answer is B, false. Challenging a SARFAESI action in a civil court is not legally permissible. Section 34 of the SARFAESI Act explicitly bars civil courts from entertaining any suit or granting injunctions in respect of actions taken or to be taken by secured creditor. Can the bank take action under SARFAESI Act against a deposit under lien with it? Answer is B. No. A bank can appropriate funds from a deposit under lien, but this action is executed under the Indian Contract Act, not the SARFAESI Act. Are hire purchase and lease contracts covered under SARFAESI Act? Answer is B. Under Section 31E of the SARFAESI Act, the provisions of the Act do not apply to conditional sales, hire purchases, or leases where no formal security interest has been created. So, answer is B. No. After the bank's notice, a defaulting borrower has paid within 60 days a substantial amount and the present dues are rupees 15 lakh, which is 15% of the claimed amount. Can bank proceed to take possession of the security? Here answer is B. No. If on some point the provisions of the Transfer of Property Act and the SARFAESI Act are different, which act will prevail? Answer is A. SARFAESI Act. The SARFAESI Act is a special law designed for the expeditious recovery of debts by banks and financial institutions. Section 35 of the Act explicitly grants it an overriding effect, meaning its provision apply notwithstanding anything inconsistent contained in any other law. Can a bank proceed to take possession of the security after 4 years of cause of action? Answer is A. Yes. Under the Limitation Act 1963, the time limit for a bank or financial institution to enforce a mortgage or take possession of a secured assets is 12 years from the date when the cause of action arises. Provisions of the SARFAESI Act are applicable to which of the following? Here answer is D. Security charged to creditors and not in possession of the creditor. When do the rules framed by central government under the Act get valid? Here answer is C. Immediately on framing of the rules by the government and notifying the same. Rules framed by the central government get valid upon their publication in the official gazette unless a specific later date is mentioned in the rules themselves. The central government may extend the time for the registration of transaction of security interest or securitization or asset reconstruction or modification or satisfaction for a maximum period of 30 days only. Here answer is B. False. Under the SARFAESI Act 2002, the law mandates an initial 30 days window to register particulars of security interest, securitization, or asset reconstruction. However, the central registrar is empowered to allow filing within the next 30 days upon the payment of additional fees. The Income Tax Department considers attaching the property in Jammu and Kashmir belonging to Mr. X for recovery of tax dues. Is such attachment order required to be filed with the Central Registry? Answer is yes. An attachment order on the property issued by the Income Tax Department is required to be filed with the Central Registry. Where security interest upon any property in favor of the secured creditor are filed for the purpose of registration, the claim of such secured creditor holding attachment order shall have priority over any subsequent security interest created upon such property. Here answer is A, true. Under section 26C of the SURFACI Act 2002, once a security interest or attachment order over a property is registered with the central registry, it acts as constructive public notice. Recovery of taxes by government departments will have priority even after the registration of the security interest by secured creditor. Answer is B, false. Government departments do not have priority over a registered security interest. Under Indian law, if a secured creditor has properly registered their security interest, their debts take precedence over all government revenues, taxes, and statutory dues. DRT Act is applicable only if the debt recoverable is above, your answer is C, 20 lakhs. Under the Recovery of Debts and Bankruptcy Act, the DRT is applicable only if the debt recoverable is above rupees 20 lakhs. The debt recoverable through DRT may be secured or unsecured. Answer is A, true. Under the Recovery of Debts and Bankruptcy Act, the Debt Recovery Tribunal has jurisdiction to hear recovery cases for both secured and unsecured debts. Overdrawn amount is an account is not a debt recoverable under DRT Acts. Your answer is B, false. Contrary to this premise, an overdrawn amount is legally considered a debt recoverable under the DRT Act. If a civil court has passed a decree, it has to be executed through that court only and cannot come to recovery tribunal. Answer is B, false. Under section 38 of the Code of Civil Procedure, a civil decree can only be executed by the court of first instance or a court to which it has been formally transferred. It cannot ordinarily be taken to debt recovery tribunal. Debt recovery tribunals are established by, answer is A, debt recovery tribunals are established by the central government of India. Debt recovery tribunals consist benches of 3 persons. Answer is A. Under section 4 of the Recovery of Debts and Bankruptcy Act 1993, a DRT is a single member tribunal. Each tribunal is headed by a single officer known as the presiding officer. Jurisdiction of appellate tribunal is with the respective high courts. Answer is B, false. Can the order of central government in the appointment of the presiding officer of the tribunal be challenged in any court? Answer is B, no. A decree passed by the foreign court can be executed by the tribunal. Your answer is A, True. A foreign court's decree can generally be executed in India, but it must be enforced through a competent district court, not directly by a specialized tribunal. The procedure and eligibility depend on whether the foreign country is a recognized reciprocating territory. For certain valid reasons, the chairperson of the appellate tribunal can transfer any case from one tribunal to other tribunal within his jurisdiction. Answer is A. True. Under relevant administrative and legal framework, the chairperson of a appellate tribunal holds the statutory authority to transfer any case pending before one bench to any other bench for disposal. For the matters for which tribunals are empowered, the civil courts have no jurisdiction. Answer is A. True. When a specialized tribunal is created, the jurisdiction of standard civil courts is expressly barred for those specific matters. DRT jurisdiction for a bank is where the head office of the bank is located. Answer is B. False. Under the Recovery of Debts and Bankruptcy Act, a debt recovery tribunal territorial jurisdiction is not determined by the bank's head office. If a bank has filed recovery application, other bank can join the application if the defendants are same. Your answer is A. True. Yes, if multiple banks or financial institutions need to recover debts from the same borrower, the latter bank can join the existing recovery application at any stage before the final order is passed. When a case gets transferred from civil court to tribunal, fresh court fee is required to be paid. Your answer is B. False. When a case is formally transferred from a civil court to a tribunal, a fresh court fee is not required to pay. The original fees paid to the civil court are carried forward and adjusted against the proceedings. A counterclaim filed before DRT has the same effect as a plaint in cross suit. Under Section 99 of the Recovery of Debts and Bankruptcy Act, a counterclaim filed before the Debt Recovery Tribunal has the same effect as a cross suit. Since DRT is not a civil court, it cannot pass interim orders such as attachment, injunction, receiver, etc. Your answer is B. False. The premise that the Debts Recovery Tribunal cannot pass interim orders is incorrect. Although DRTs are not traditional civil courts, they are legally empowered by the Recovery of Debts and Bankruptcy Act to grant interim reliefs. A person who has to file appeal before the appellate tribunal has to pay, answer is A, 50% of the debt ordered by the tribunal. To file an appeal before the appellate tribunal, a person must pay a prescribed appeal fee and a pre-deposit of tax, interest or penalty admitted or demanded in the original order. While filing appeal before the appellate tribunal, if any amount is required to be deposited, their answer is C. Yes, 50% of the amount determined by the tribunal is required to be deposited at the time of filing of the appeal. Recovery officer appointed under the Recovery of Debts and Bankruptcy Act can attach and sell movable as well as movable property of the person against whom order is passed, even if the property is not charged to the creditor. Answer is A. Yes. Under the Recovery of Debts and Bankruptcy Act 1993, a recovery officer can attach and sell any of the defendant's movable or immovable properties to recover the certified debt, even if those specific properties were not originally charged or mortgaged to the creditor. The defendant can raise a plea before the recovery officer about correctness of the amount ordered to be paid. Answer is B. Under the Recovery of Bank Debts and Bankruptcy Act 1993, the defendant cannot dispute the correctness of the amount before the recovery officer. Which amongst the following is the ultimate and topmost objective of any bank in introducing robust digital technology? Here answer is C. Ensured value addition to the customers. If the recovery certificate has clerical or arithmetical mistake, presiding officer of the tribunal can correct the same. Here answer is A. True. Yes, the presiding officer of the debt recovery tribunal has the explicit power to correct any clerical or arithmetical mistakes in a recovery certificate. For recovery, the recovery officer can adopt the same methods as adopted for recovery of income tax under the Income Tax Act. Their answer is A. True. Under Indian law, specifically under the Recovery of Debts and Bankruptcy Act 1993, the recovery officer is indeed authorized to adopt the same core methods as used for the recovery of income tax. Recovery officer can ask the defendant to furnish by affidavit particulars of his asset. Your answer is A. True. A company is under winding up process. Whether High Court permission is required to a bank to proceed against it before DRT. Your answer is A. No. As the DRT Act being a special law having overriding effect over other laws. In respect of a real estate project of a corporate debtor, what is the minimum number of allottees who have to jointly file for initiation of corporate insolvency resolution process? Answer is B. 100 allottees or 10% of the total number of allottees whichever is less. How much time is given by an adjudicating authority to rectify a defect in the application of a financial creditor for initiation of corporate insolvency resolution process against a corporate debtor who has defaulted? Answer is 7 days. Within 7 days. As per the Books Evidence Act 1891, judge means, answer is, as per the Bankers Book Evidence Act 1891, a judge means a judge of a high court. So answer is D. Which of the following persons are not authorized to a certificate under section 2A of Bankers Books Evidence Act 1891? Answer is D. Under section 2A of Bankers Book Evidence Act 1891, any person not designated as the principal accountant, branch manager, or the person in charge of the computer system is unauthorized to issue the mandatory certification. A court might order a bank to prepare and produce copies of entries relevant to the matters in issue, accompanied by certificate that no other entries are to be found in the books, and such order has to be served. Your answer is A. 3 clear days before the same is obeyed. Under section 6(2) of the Bankers Book Evidence Act 1891, any court order directing a bank to prepare and produce certified copies of entries must be served on the bank at least 3 clear days before the bank is required to comply with it. Any order made under the Act for payment of cost to or by a bank may be enforced as if the bank were a party to the proceeding. Here answer is A. True. This principle ensures that if a regulatory or statutory authority passes an order for costs that involves a bank, that order can be directly executed against or by the bank. The bank is treated as if it were a primary party to the lawsuit, simplifying the enforcement of financial penalties or awards. Lok adalats are organized under the Legal Services Authorities Act 1987. Lok adalats are intended to bring about a compromise or settlement in respect of any dispute or potential dispute. Here answer is A. True. Lok Adalat act as an alternative dispute resolution mechanism to settle pending or pre-litigation cases through compromise. Mandated under the Legal Services Authorities Act 1987, they emphasize speedy, cost-effective justice. Lok adalats shall be guided by the principles of justice, equity, fair play, and other legal principles. Here answer is A. True. Lok adalats are guided by the principles of justice, equity, fair play, and other core legal principles under section 24 of the Legal Services Authorities Act 1987, these statutory bodies prioritize quick amicable dispute settlements over strict adversarial adjudication. No appeal shall lie in any court against the above. If no settlement, the case shall be remitted back to the court which referred to the matter to the Lok Adalat. Here answer is A, true. Under section 21 of the Legal Services Authorities Act 1987, a Lok Adalat award is final, binding and deemed a civil code decree because it is a consensual settlement. No appeal lies to any court. If parties cannot agree, the case is remitted back to the original court. Urgently, the monetary ceiling of amounts for settlement through Lok Adalat is rupees 20 lakh. The main advantage for banks, financial institutions in using the forum of Lok Adalat is settlement of their NPAs by compromise. Here answer is A, true. For banks, Lok Adalats offer an efficient cost-free alternative to clear smaller non-performing assets through mutual compromise without prolonged litigation. Operating under the National Legal Services Authority framework, settlements finalized here become legally binding civil decrees that cannot be appealed in higher courts. If one party intends to refer the dispute to Lok Adalat, the consent of the other is not required. Here answer is B, false. For a standard Lok Adalats, the concept of both parties is mandatory for a dispute to be referred, heard, and settled. Lok Adalats function purely on compromise and conciliation. The Consumer Protection Act 2019 was enacted on August 9, 2019 and came into force from July 20th, 2020. While certain provisions of the Act, like establishing the Central Consumer Protection Authority, came into effect from July 24th, 2020. Here answer is A, true. The Consumer Protection Act 2019 replaced the outdated 1986 legislation to modernize consumer rights, specifically addressing e-commerce product liability and misleading advertisements. The District Consumer Disputes Redressal Commission established under the Act in each district entertains complaints where the value of the goods or services paid as consideration does not exceed rupees 50 lakh rupees and provides redress in such cases. Here answer is A, true. Under the Consumer Protection Act 2019, the District Consumer Disputes Redressal Commission entertains complaints where the value of the goods or services paid as consideration does not exceed rupees 50 lakhs. The State Consumer Disputes Redressal Commission is set up to usually entertain complaints where the value of the goods or services paid as consideration exceeds rupees 50 lakhs but does not exceed rupees 2 crore and also acts as the appellant authority in respect of orders by District Commission. Here answer is A, true. The National Consumer Dispute Redressal Commission, set up under Section 53, entertains complaints beyond rupees 2 crore and also acts as an appellant authority in respect of ordered decisions by State Commission. Appeal in respect of a decision by the National Commission lies with the Supreme Court. Here answer is A, true. The National Consumer Disputes Redressal Commission has specific rules defining its monetary boundaries and appeal structure under the Consumer Protection Act 2019. A consumer includes a person who buys a good or services for commercial purposes. Here answer is B, false. Under consumer protection laws such as Consumer Protection Act, buying goods or services specifically for commercial purposes like resale or extracting a profit generally excludes from being legally defined as a consumer. Which one of the following is the chairperson of the Central Consumer Protection Council? Here answer is D, Minister in charge of the Department of Consumer Affairs. The minister in charge of the Department of Consumer Affairs in the central government acts as the chairperson of the Central Consumer Protection Council. In the Limitation Act, the definition of suit does not include appeal or application. Here answer is A, yes. That is absolutely correct. According to Section 2(1) of the Limitation Act 1963, the term suit does not include an appeal or an application. The defendant is required to set up the plea of limitation if he has to succeed in a suit instituted beyond the period of limitation. Here answer is B, false. In jurisdiction following the Indian legal framework, this statement is incorrect. Under Section 3 of the Limitation Act, a court is mandated to dismiss any suit instituted after the prescribed period of limitation, even if the defendant has not taken the plea of limitation in their defense. A suit is said to be instituted when the plaintiff is presented before the proper officer. Here answer is B, false. Under Section 26 of the Code of Civil Procedure 1908, every civil suit is officially initiated by presenting a plaint to the court or an appointed officer. Acknowledgement in writing gives rise to fresh period of limitation. Here answer is A. Acknowledgement in writing gives rise to fresh period of limitation. Part payment of a debt within the period of limitation entails the plaintiff to compute fresh period of limitation from the date of payment. Here answer is A, yes, true. The Indian Limitation Act, a partial payment of debt made before the original limitation period expires, establishes a fresh period of limitation starting from the exact date the payment was made. Limitation for a mortgage suit is 3 years from the date when the mortgage money becomes due. Here answer is B, false. Under the Limitation Act 1963, a suit to enforce payment of money secured by a mortgage actually has a limitation period of 12 years from the date the money becomes due. A suit on demand promissory note can be filed within 3 years from the date on which the demand was made. Here answer is B, false. Under the Limitation Act 1963, the 3-year clock to file a suit on a demand promissory note begins from the date the documents was executed, not the date the, the demand was made. Liability to pay income tax arises on account of residential status and place of the source of income. Answer is A, true. Under the Income Tax Act, an individual's tax liability is fundamentally governed by their residential status at the place where the income is generated. While citizenship dictates where you vote, residency determines how your global or local income is taxed in India. Assessment year represents the period of 12 months beginning from 1st April each year following the relevant financial year. Answer is A, true. The assessment year is the 12-month period from 1st April to 31st March immediately following the financial year. During this time, the income you earn in the preceding financial year is officially evaluated and taxed. Assessment is of two types, summary assessment and scrutiny assessment. Here answer is A, true. Summary and scrutiny assessments are two key procedures used by tax authorities to verify tax liabilities. Summary assessment is a rapid automated check of filed returns, whereas a scrutiny assessment involves a detailed manual examination of a taxpayer's accounts and supporting evidence. Entire advance tax is to be paid by 15th March. Your answer is A, yes. 15th March is the crucial deadline to pay the final installment of your advance tax liability for the financial year. Tax deduction is to be made before making interest payment to non-residents in NRO accounts. Your answer is A, true. Tax is strictly deducted at source before any interest payment is credited to a non-resident ordinary account. Under Section 195 of the Income Tax Act, banks are legally mandated to withhold taxes on all interest earned within India. Tax deducted at source is to be deposited within 1 week from the end of the month in which it is to be deducted. Your answer is A, true. Tax deducted at source is generally due by the 7th of following month in which the tax was deducted. However, for deduction made in March, the deadline is extended to April 30th. Person deducting tax at source is required to file a quarterly return of TDS. Here answer is A, true. Under the Income Tax Act, any person or entity responsible for deducting tax deducted at source must file quarterly TDS returns. This statement details the payment made and the specific tax deducted, and it must be submitted to the Income Tax Department within the prescribed deadlines. The goods and service tax is one direct tax for the whole nation. Here answer is B, false. The goods and service tax is an indirect tax, not a direct tax. It is applied uniformly across the nation to unify various indirect levies like VAT, excise duty, and service tax under a single one nation, one tax framework for the supply of goods and services. Senvet credit can be availed of in respect of tax paid on certain specified input services. Here answer is A, true. Under the Senvet credit framework, businesses can avail credit of the service tax paid on specified input services used to manufacture final products or provide output services. A consent is said to be free when the parties to the contract agrees to the same thing in the same sense. Here answer is A, true. Under contract law, consent to become a legally binding agreement, the law requires this consent to also be free consent. A contract without consideration is void. Answer is A, true. In contract law, an agreement made without consideration is generally void, meaning it cannot be legally enforced. Consideration is the exchange of something of value, such as money, goods, services, or a legal promise between parties to form the basis of their deal. A person who makes a proposal is known as promisor. Here answer is A, correct. In legal and contract terminology, a person who makes a proposal is called the promisor. A person is said to be competent to contract if he is a major and of sound mind. Here answer is A, true. Under section 11 of the Indian Contract Act 1872, being a major of sound mind are two essential requirements for a person to be legally competent to contract. However, a third condition must also be met. The person must not be legally disqualified from contracting by any law. A enters into an agreement with B to rob C and share the money. B runs away with all the money. A can file a suit against B to recover the money. Your answer is no, because it is a void contract. Mr. X can enter into an agreement with Mr. Y to buy a car. Here, age of Mr. X is 17 years and age of Mr. Y is 25 years. Your answer is B, false. Mr. X cannot legally enter into a binding agreement to buy a car on his own. Under the Indian Contract Act 1872, an individual must be at least 18 years old to be legally competent to contract. Because Mr. X is 17 years old, the agreement is considered legally void from the beginning. A contract is concluded only when the party to whom the proposal is made accepts the proposal. Your answer is B, false. A contract is legally concluded only when the party to whom the proposal is made unconditionally accepts it. Until that mutual assent is reached and communicated, the proposal is merely an offer and creates no binding legal obligations. A person who is indemnified can recover damages as well as costs for claiming the damages. Here answer is A, yes. A person who is indemnified is generally entitled to recover both the damages they suffered and the cost or expenses incurred in making or defending their claim. Where notice has to be given to the indemnifier as per the terms of indemnity. The indemnity holder has to abide by it to be entitled to the claim. Here answer is A, yes. If the contract of indemnity includes a specific clause requiring the indemnity holder to give notice to the indemnifier, the indemnity holder must strictly abide by it. Failure to provide timely or proper notice can invalidate the claim or relieve the indemnifier of their obligation to compensate. In a contract of indemnity, the promisee is the indemnifier. Here answer is B, false. No, this statement is incorrect. In a contract of indemnity, the indemnifier is the promisor, while the promisee is the indemnified who receives the protection or compensation for their losses. In a contract of indemnity, the indemnifier is primarily liable. Answer is yes. In a contract of indemnity, the indemnifier's liability is absolute and primary. The indemnifier must compensate the indemnified party for any losses covered by the agreement as soon as the loss occurs without requiring the indemnified party to pursue a third party first. In a contract of guarantee, the liability of the surety is secondary. Here answer is A, true. In a contract of guarantee, the liability of the surety is secondary. This means the principal debtor remains primarily responsible to fulfill the obligation and the surety is only liable to step in and pay if the debtor defaults. Anything done for the benefit of the principal debtor is a sufficient consideration to the surety for giving the guarantee. Here answer is A, true. Under contract law, specifically section 127 of the Indian Contract Act, anything done or any promise made for the benefit of the principal debtor is considered sufficient consideration to legally bind the surety. Where there are co-sureties, a release by the creditor of one of them does not discharge the others. Here answer is A, true. Under section 138 of the Indian Contract Act 1872, if a creditor releases one of several co-sureties, the remaining sureties are not discharged from their obligations to the creditor. Furthermore, it does not free the released surety from their financial responsibility to the remaining co-sureties. Principal debtor need not pay the surety after the surety has paid the amount to the creditor. Here answer is B, false. In the eyes of the law, the surety's payment does not extinguish the debt, it simply shifts who is owed the money. Bailor is a person who delivers his goods to the surety to enable him to give a guarantee. Here answer is B, false. A bailment involves the delivery of goods by a bailor to a bailee for a specific purpose with the condition they will be returned once the purpose is accomplished. Bailee can use the goods given by the bailor in the manner as he likes. Here answer is B, false. Under the Indian Contract Act 1872, a bailee does not have the right to use bailed goods however they like. The bailee can keep the goods bailed to him and he need not return the same to the bailor. Here answer is B, false. The statement is entirely false. Under a contract of bailment, returning or properly disposing of the goods is a foundational duty. A bailee cannot simply keep the bailed goods. They are strictly required to hand them back to the bailor or follow specific instructions as soon as the agreed upon purpose is accomplished. Giving a product on rent or use to another person is a contract of bailment. Yes, correct. That is exactly correct. Giving a product on rent or use is a classic example of a contract of bailment. If ornaments kept in the safe locker of bank are stolen in spite of due care by the bank is liable to the depositor of ornaments. Yes, but with strict financial limits. Under current RBI regulations, banks are liable for the theft of locker contents even if they exercised due care. However, this liability is capped at 100 times the annual locker rent and the bank is not automatically liable for the full market value of the stolen ornaments. It is the obligation of the bailee to keep his goods separate from the goods of the bailor. Yes, true. Under the law of bailment, a bailee generally has a strict obligation to keep the bailor's goods separate from their own property. Mixing them improperly or without permission carries specific legal consequences. The bailer is liable for any loss to the bailee if the goods bailed are defective and the bailer knowingly does not disclose this fact to the bailee. Your answer is A, true. Under general contract law, the bailer is bound to disclose any faults or defects in the goods bailed of which they are aware. If the bailee has rendered any service involving the exercise of labor or skill in respect of the goods billed to him, he has a right to retain such goods until he receives due remuneration for the services he has rendered. Here answer is A, true. Under Section 170 of Indian Contract Act 1872, if a bailee exercises labor or a skill to improve or repair bailed goods, they can legally retain the items until they are paid for their services. For a contract of bailment to be valid, there should always be a contract between parties in writing. Here answer is B, false. No, a contract of bailment does not need to be in writing to be valid. The foundational agreement between the bailer and bailee can be expressed, written or oral, or entirely implied by the conduct of the parties. For a valid bailment, possession of bailed goods with the bailee is a must. Your answer is A, true. Without the bailee gaining possessions, there is no bailment. In a pledge, the goods are delivered to be kept as security for a debt or for performance of a promise. Here answer is A, correct. A pledge is a specialized form of bailment where goods are delivered by a pawner to a pawnee as collateral. The receiver holds these goods strictly as security for a debt or for performance of a promise. It is the obligation of the bailee to keep his goods separate from the goods of the bailer. Here answer is A, true. Under the law of bailment, a bailee generally has a strict obligation to keep the bailer's goods separate from their own property. Mixing them improperly or without permission carries specific legal consequences. The pawnee can sell the goods if the owner fails to pay. Here answer is A, true. Under section 176 of the Indian Contract Act 1872, the pawnee indeed has the legal right to sell pledged goods if the owner defaults, but only if reasonable notice is given first. The pawnee can sell the goods without giving notice to the pawner. Your answer is B. This statement is false. Under section 176 of Indian Contract Act 1872, giving reasonable notice is a mandatory statutory requirement. The pawnee cannot legally sell the pawned goods without providing this notice and a fair amount of time to the pawner to clear the debt. The pawnee can keep the goods even after the pawner has paid the dues. Your answer is B, false. Once the pawner has paid all dues, including the principal loan, accrued interest, or any necessary preservation expenses, the pawnee is legally obligated to return the pledged goods. The pawnee pledgee can repledge the pledged goods. Here answer is A, true. A pledgee can repledge the goods but only to the extent of their own interest. The original pledger remains the rightful owner and can reclaim the goods at any time by clearing their original debt. Which one of the following is essential for a valid contract of agency? Here answer is B. The principal should have capacity to contract. The agent is appointed to act as a connecting link and bring the principal into a binding contractual relationships with third person. Here answer is A, true. An agent is an intermediary legally appointed to represent a principal. Their primary function is to establish privity of contract between the principal and third parties, legally binding them together. Once the contract is finalized, the agent generally drops out, leaving the principal and third party directly accountable. Under the Indian Contract Act 1872, a principal could be a minor. Here answer is B, false. Under the Indian Contract Act 1872, a minor cannot act as a principal. According to Section 183 of the Act, the legal capacity to appoint an agent is reserved strictly for individuals who have attained the age of majority and are of sound mind. An agent could be a minor as per the provisions of Indian Contract Act 1872. This statement is not correct. Here answer is B, false. By implication, the work done by an agent for a principal is equivalent to work done by the principal himself. Here answer is A, true. In legal and agency principles, the concept that the work done by an agent for a principal is equivalent to work done by the principal himself is known as he who acts through another acts for himself. In the absence of contract to the contrary, an agent may retain goods, papers, etc., whether movable or immovable, belonging to the principal received by him or in his possession until the amount due to him in respect of such goods, etc., has been paid or accounted for to him. Here answer is A, true. This principle describes an agent's lien, a legal right that allows an agent to hold a principal's property until they are fully paid for their services. Price means the consideration for a sale of goods. Here answer is A, true. In legal terms, price is defined as the money consideration for a contract of sale of goods. It represents the legal tender that a buyer pays or promises to pay to a seller in exchange for transferring ownership of goods. Goods as defined under Sale of Goods Act do not include actionable claims. Here answer is A, true. Under section 27 of the Sale of Goods Act 1930, the definition of goods is strictly limited to a movable properties and it explicitly excludes both actionable claim and money. Future goods are to be manufactured, produced, acquired by the seller after making of the contract of sale. Here answer is A, true. Future goods are defined as goods that are to be manufactured, produced or acquired by the seller after the contract of sale is made. Because a person cannot transfer ownership of something that does not yet exist. Contracts for these goods operate strictly as agreement to sell rather than immediate actual sales. Specific goods means goods identified and agreed upon at the time a contract of sale is made. Here answer is A, true. Under legal frameworks like the Sale of Goods Act 1930, specific goods refer to items that are physically pointed out, identified, and explicitly mutually agreed upon by both parties when the sales contract is created. Delivery means voluntary transfer of possession from one person to another. Here answer is A, true. Delivery is legally defined as the voluntary transfer of possessions from one person to another, not necessarily the transfer of ownership. It ensures that the buyer gains control over the goods. When the transfer of property in the goods is to take place at a future time or subject to some conditions thereafter to be fulfilled, the contract is called agreement to sell. Here answer is A, true. Under contract and commercial laws, this distinction is crucial for determining ownership and liability. In agreement to sell, the ownership of goods is yet to pass from the seller to the buyer. Your answer is A, true. In this type of contract, the transfer of property or ownership in the goods is conditional or scheduled to occur at a future date. The ownership remains with the seller until that specified time elapses or the agreed upon conditions are met. Equity shares are goods within the meaning of the Sale of Goods Act. Here answer is A, true. According to section 27 of the Sale of Goods Act 1930, the term goods includes every kind of movable property expressly identifying stocks and shares. Because equity shares are considered movable property, their purchase and sale are strictly governed by the provisions of this Act. Fixtures can be regarded as movable goods only if they are intended to be saved and sold separately. Your answer is A, true. Under property and contract law, things attached to the land are typically considered immovable property. They only qualify as movable goods if there is an explicit agreement that they will be severed from the land and sold separately. If the stipulation agreed to between the parties is essential to the main purpose of the contract, then such a stipulation is known as a condition. Here answer is A, true. In contract law, a stipulation that goes to the root of the agreement and is essential to the main purpose of the contract is known as a condition. A warranty is a stipulation collateral to the main purpose of the contract. Here answer is A, true. In contract and business law, a warranty is an additional or subsidiary promise that is secondary to the primary objectives of the contract. There is an implied condition on the part of the seller that he has a right to sell the goods. Here answer is A, true. This is the fundamental legal principle in contract and commercial law. Under Section 14A of the Sale of Goods Act 1930, there is an automatic implied condition that the seller has the right to sell the goods when the property is meant to pass to the buyer. If the sale of goods is by description, there is an implied condition that the goods shall correspond with the description. Here answer is A, true. This is the fundamental principle of contract and commercial law. Under law, like the Sale of Goods Act, whenever you buy goods by their description, there is an automatic condition that the delivered items will be exactly match that description. In every contract of sale, it is implied that the seller has got the right to sell the goods. Here answer is A, true. This is again fundamental legal principle in contract and commercial law. Under the Sale of Goods Act, it is an implied condition that the seller has the right to sell the goods. An implied warranty as to quality or fitness for particular purpose may be annexed by the usage of trade. Here answer is A, true. An implied warranty or condition as to the quality or fitness for a particular purpose may indeed be annexed by the usage of trade. In commercial transaction, if a custom or well-established practice within a specific industry is consistently followed, it becomes legally binding and is incorporated into the agreement, even if not explicitly stated. There is an implied condition as to the quality or fitness of goods for any particular purpose. Here answer is A, true. Under this principle, sellers are not automatically liable if a product fails to meet a buyer's specific needs. The responsibility is on the purchaser to inspect and test goods prior to purchase. When the seller is in possession of goods, a lien can be exercised. Here answer is A, true. When goods are fully in the possession of the seller, an unpaid seller can legally exercise a possessory lien detaining the goods until payment is received. This right applies unconditionally under specific legal conditions such as the Section 47 India Code of the Sale of Goods Act. Lien is terminated when the buyer gets the possession of the goods. Here answer is A, true. Under contract and commercial laws, an unpaid seller's right to lien is terminated the moment the buyer or their agent lawfully obtains possession of those goods. When property in the goods has not passed to the buyer and the buyer becomes insolvent before the price is paid, the seller can withhold the delivery of goods. Your answer is A, true. Under the Sale of Goods Act, a seller has the right to withhold delivery when the buyer becomes insolvent before the price is paid, regardless of whether the property in the goods has passed to the buyer. A seller who has accepted a negotiable security as an absolute payment is no longer an unpaid seller. Here answer is A, true. Under contract law, a negotiable instrument is generally considered conditional payment. If the instrument bounces, the condition fails and the seller reverts to being an unpaid seller with rights against the goods. If one partner cheats a customer of the partnership firm, then all the partners of the partnership firm are liable to compensate the customer. Here answer is A, true. Under Section 26 of the Indian Partnership Act 1932, all partners are vicariously liable to compensate a customer if one partner commits a wrongful act or fraud while acting in the ordinary course of the firm's business. Registration of firms is compulsory under the Partnership Act. Answer is B, false. Under the Indian Partnership Act of 1932, registration of a firm is optional, not compulsory. A partnership can be legally formed by drafting a partnership deed. It is compulsory to enter into a partnership deed. Here answer is B, false. It is not legally compulsory to enter into a written partnership deed. Under the Indian Partnership Act 1932, a partnership can be legally formed based on verbal agreement. The partners are free to decide their mutual rights and liabilities. Here answer is true. Partners are free to determine their mutual rights and liabilities through a partnership deed. However, this freedom is not absolute. Any contractual terms agreed upon must abide by the prevailing statutory laws and cannot alter certain fundamental statutory duties. A partnership deed can even provide that a particular partner would not take part in the day-to-day business decision of the partnership firm. Here answer is A, true. A partnership deed can legally specify that certain partners will not participate in day-to-day business decisions. Consent of all the partners is necessary to change the nature of business carried on by the firm. Here answer is A, true. Under Fundamental Partnership Laws of the Indian Partnership Act 1932, the unanimous consent of all partners is required to fundamentally change or expand the nature of the business. A partnership at will can be dissolved by notice. Here answer is A, true. A partnership at will can indeed be dissolved by any partner simply giving notice to the others. A limited partnership firm can be constituted as per the provisions of the Partnership Act 1932. Here answer is B, false. A limited liability partnership cannot be constituted under the Indian Partnership Act 1932. Instead, LLPs are entirely separate legal entities governed by the Limited Liability Partnership Act 2008. A partnership can arise out of an inheritance. Here answer is B, false. Legally, a partnership cannot arise directly by birth, status or inheritance. It is fundamentally a creature of contract requiring an active agreement between the parties. The contract of partnership can be express or implied. Here answer is A, true. A partnership is a creature of contract, not a status, and this foundational agreement can be formed either expressly or impliedly. Every partner has a right to receive remuneration. Here answer is B, false. Under partnership laws, a partner is not legally entitled to remuneration for taking part in the business conduct. However, this is subject to the partnership deed. If there is an active agreement, partners can receive a salary or commission. It is necessary that all the partners in the partnership firm must receive equal share of profit in the partnership firm. Here answer is B, false. No, it is not necessary for all partners to receive an equal share of profit. Profit sharing ratios are entirely up to the partners and are based on mutual agreement. No partner is entitled to use the partnership property for his private purposes. Here answer is A, true. Under partnership law, the property of the firm must be held and used exclusively for the purpose of the partnership's business. No partner is entitled to use it for personal or private gain. A single partner can be authorized to carry on business and sign documents on behalf of the firm. Answer is A, true. A single partner can absolutely be authorized to act, conduct business and sign documents on behalf of the firm. This arrangement is incredibly common when a firm needs to streamline daily operations or handle routine banking and contracts without requiring signatures from all partners. Misapplication means taking property or money from a third party and using it for the purpose for which it was taken in the interest of the partnership firm. Here answer is B, false. In partnership law, misapplication refers to the wrongful use or misappropriation of money or property belonging to a third party or the firm itself. If a partner uses the funds for an unauthorized purpose or converts them to their personal use, it constitutes misapplication and the firm is held liable. When a person who is not at all a partner in a firm either represents himself or knowingly permits himself to be represented as a partner in a firm, and as a result of this, he induces others to give credit to the firm, then this act is known as holding out. Your answer is A, true. This act is officially known as the doctrine of holding out or being a partner by estoppel. A minor can be a partner in a partnership firm. Here answer is B, false. Under the Indian Partnership Act 1932, a minor cannot be a full-fledged partner because they are legally incompetent to enter into a contract. However, with the unanimous consent of all existing adult partners, a minor can be admitted to the benefits of a partnership. A minor is personally liable, like other partners, to pay the debts of the firm. Their answer is B, false. Under partnership law, a minor cannot be a full partner. Instead, they can only be admitted to the benefits of the partnership with the consent of all existing partners. A minor partner who has attained majority may give public notice to the effect whether he has elected to become a partner or not. Answer is A, true. Under Section 30 of the Indian Partnership Act 1932, a minor who was admitted to the benefits of a partnership can elect to become a full partner or leave the firm upon attaining majority. They must declare their choice by issuing a formal public notice. A partner of an unregistered firm can file a suit against other partners to get his share of profits. Answer is B, false. A partner of an unregistered firm cannot file a standard civil suit against the firm or other partners to enforce contractual rights or recover a specific share of profits. Under Section 69(1) of the Indian Partnership Act 1932, the firm must be registered for a partner to sue their co-partners. The enforcement of any right to sue for matters relating to the dissolution of a firm is not affected and can be brought before the court of law. Answer is A, true. Under Section 69(3)(a) of Indian Partnership Act 1932, the right to sue for the dissolution of a firm or the settlement of accounts of a dissolved firm is expressly saved and remains unaffected even if the firm is unregistered. Such suits can be brought before a court of law. The company has to be compulsorily registered under the Companies Act 2013. Here answer is A, true. In India, any business structured as a company must be compulsorily registered with the Registrar of Companies under the Companies Act 2013. Unregistered companies cannot legally operate. If all the members of a company die, then the company has to be wound up. Your answer is B, false. This is a common misconception, but it is false. Under company law, a registered company possesses a separate legal entity and enjoy perpetual succession. The death, bankruptcy, or departure of all its members does not automatically dissolve the company. A company is a legal person with perpetual succession. Answer is A, true. A registered company is recognized as an artificial legal person that is completely separate and distinct from its owners, shareholders, and directors. In a case of a company limited by shares, the creditors of the company can recover the money from the members if the company is not making profits. Your answer is B, false. Creditors generally cannot recover company debts from the shareholders, regardless of whether the company is profitable or not. A company is recognized as a separate legal entity, meaning the financial risk of members is limited to their specific investment. A private company should have minimum paid up capital of rupees. Here answer is D, no minimum requirement. While the Companies Act 2013 originally required a minimum paid up share capital of rupees 1 lakh, this requirement was completely abolished by the Companies Act 2015. Businesses can now be incorporated with any nominal amount of paid up capital that suits their operational needs. In case of conflict between the Memorandum of Association and Articles of Association, the Articles of Association prevail. Here answer is B, false. The Memorandum of Association always prevails over the Articles of Association. In a company limited by shares, the member is liable to pay the full nominal value of shares and the liability of member ends there. Your answer is A, yes. In a company limited by shares, a member's financial responsibility is strictly restricted to the nominal value of the shares they have subscribed to. A company proposing to issue a red herring prospectus shall file it with the registrar at least 3 days prior to the opening of subscription list and the offer. Here answer is A, true. Under section 32 of the Companies Act 2013, a company proposing to issue a red herring prospectus must file it with the registrar of companies at least 3 days prior to the opening of the subscription list and the offer. The advantages of which forms of business organization is incorporated in the Limited Liability Partnership Act 2008. Here answer is C, partnership firm and private limited company. The Limited Liability Partnership Act 2008 incorporates the advantages of two primary business forms, partnership firms and private limited companies. A limited liability partnership may appoint a designated partner within 15 days of a vacancy arising for any reason. Here answer is B, false. Under the Limited Liability Partnership Act 2008, an LLP is required to appoint a designated partner within 30 days of vacancy arising, not 15. If the vacancy is not filled, every partner in the LLP is automatically deemed to be a designated partner. Transfer of Property Act basically contains provisions relating to transfer of movable property and goods. Your answer is B, false. Actually, the opposite is true. While the Transfer of Property Act 1882 includes provision for both types of assets, it fundamentally focuses on regulating the transfer of immovable property such as land, houses and permanent structures. In a simple mortgage, the mortgagor does not deliver possession of the mortgage property to the mortgagee. Here answer is A, true. In a simple mortgage, the mortgagor retains both ownership and physical possessions of the property. It acts purely as a collateral agreement to secure the loan. The power of sale without intervention of the court is given to the mortgagee in the case of. Your answer is B, English mortgage. Under section 69 of the Transfer of Property Act 1882, a mortgagee is given the power of sale without the intervention of the court in case of English mortgage. Every citizen is entitled to seek information under the Right to Information Act from a public authority. Here answer is A, true. In India, any citizen can request information held by or under the control of any public authority under the Right to Information Act 2005. This applies to government bodies, ministries and entities owned, controlled or substantially funded by the government. The request for information has to be disposed of ordinarily within 30 days. Your answer is A, true. Under the Right to Information Act 2005, government authorities are required to dispose of information request ordinarily within 30 days of receipt. Central Information Commission can recommend taking disciplinary action against the Central Public Information Officer if the latter failed to furnish information within the specified time. Here answer is A, true. Under Section 20 of the Right to Information Act 2005, the Central Information Commission is empowered to recommend disciplinary action against a Central Public Information Officer under the relevant service rules. All the best for the exam. Thank you very much.